Hey guys, Justin Cooey here, one half of the Platinum Estates team at Rematch Realtron, your personal real estate consultant. Just wanted to take the time to answer a question that has been thrown my way a lot recently do I believe if Toronto, especially the Canadian housing market, is going to experience a housing bubble that's going to burst? And I don't believe that to be the case within the next several years. Of course, that however is depending on a few factors. That being said, I do believe that housing correction will inevitably happen. I don't think that anybody can escape that fact. If you keep predicting bad news, you're eventually going to become a prophet and gain your wish. The bottom line is that if you're going to be sitting in a desert crying for rain, just make sure that eventually, when the storm does hit, you are well prepared with an umbrella and be prepared to ride out the storm. Now that being said, just a little in regards to a commentary, my job isn't to be able to predict what's going uh, on a day-to-day basis because opinions always change. However, the one reason of why I don't read the newspapers anymore is because chief economists from every major bank, I'm sure we can all unanimously agree if we been tracking all of the articles since the early 2000s, we're supposed to be hitting a economic bubble crisis with regards to our housing market that has supposed to be happening year in, year out over the last several years. It always just seems to be on the horizon over the next couple of months, maybe 1 year away, but it hasn't hit just yet. Now, that being said, for to get a better understanding of my perspective, we have to take an overall global look at the economy. And what happened is, if we look back in history in 2008, we can agree that Canada was pretty well insulated from the economic downturn. That being said, of course, not all of our industries had remained unscathed. Of course, manufacturing taking a very big hit and still being on the road to recovery. But that being said, overall, currently today, what our main concerns is looking at is number one, uh, the European crisis and seeing whether or not Greece will default on their debt, national debt. And then as well on top of that too is that if Greece falls, will there be any other nations to follow suit? Now, of course, in the South, we're going to be looking to to America, our number one largest trading partner, and who has just recently increased their debt ceiling, and is also, of course, on the road to recovery as well too. Now, that being said, we got to be looking as well as some local factors in regards to interest rates and how it blends in together overall in the view. Now, uh, if you look back at being a student in history myself over the last 50 years, the only times that we have had any severe degradation in housing prices specifically have occurred when we have hit double-digit interest rates, which if you want to check your index chart, you will be able to see in the early 80s and the late 80s, early 90s. Now, that being said, historically, over the last 30 years, it has been shown that the healthy, balanced market will find ourselves with be paying an average of 6 to 8% of interest rates. That being said, currently at the moment we're at historical lows, paying anywhere between 2.25, probably 3.5%, depending on the rate you've negotiated. So what we need to look at is that overall, in the long term, we have to expect that, of course, interest rates are going to rise. However, only I firmly believe that if we have dramatic increases in our interest rates, like maybe we're talking about like 4, 5, 6% overnight, then obviously I don't believe that the economy in general, like socioeconomic conditions and society will be able to adapt to the market conditions fast enough. However, if we do, from a long-term perspective, are able to increase our interest rates, 25, maybe 50 basis points, spread it over several months, and again spread out each over several years, then I believe that the economic climate should be okay and that we will have enough time to adjust to the market conditions. So again, that being said, it's pretty much just one of the things that I was looking at. And also one of the things that we'll be looking to is confident the is there a housing bubble out there? I mean, I honestly firmly believe, I always make this joke, is that number one, our housing market would actually be a lot better if we didn't have American television reading all of the bad news. Now, the bottom line is that, again, at the end of the day, you have to prepare for an economic downturn, and this is just a personal message going out to all of my past clients and the current clients that I'm working with now at the moment. Basically, my style has always been to make sure that you have a certain level of confidence in your financial responsibility and as well as your job stability and being able to make sure that you pay your mortgage. But the bottom line is that I've never been one to go much on the financial factor. I pretty much tell people that it's good time to buy when you're ready to do so. The bottom line is that I firmly believe real estate is all about a lifestyle change. So I am never going to be a cynic and tell people that you should wait on the sidelines thinking that the housing price is going to go down. The bottom line is that I am sure that we can all agree that the reason of why we have money in the first place is to support our lifestyles. So that should be something that comes first. And I'm not one of those speculators, and I never want to ever securely tell a person what to do with their lives. It's only that when they're ready to do uh, what needs to be done that they come to me for help. As an example, we recently had a client come to us who was, a single guy, is actually about to get married, who was engaged, and is also expecting a child within the next year. The bottom line is, how do I tell him that, hey, you know what, maybe I think they should stay in your one bedroom condo and muscle it out because on a speculative nature, something is going to happen with the market. Now, whether or not an economic downturn does happen in the next year, I believe as long as you make the right fundamental choices, then you should be okay over the long term. That being said, that is just how real estate has always been played, and I can't ever make a safe prediction of what will happen in the short term. So just to sort of outline a story and experience of some owners that I personally know who had shared with me their experience when they had bought in 89 as the housing market was just about hitting its peak right before it crashed. They knew that over the next several years, especially going into the mid and late 90s, the property value had not recovered. However, the bottom line to them was that they had made the choice to, have more space so that their family could grow, and that the equity wasn't their number one concern. It was just making sure that everybody was safe and secure. And the bottom line was that the value they'd received and the memories of the real estate that they had purchased over the years had more than greatly compensated for any value that they had expected to pay. And at the same point since then, of course, they paid down their mortgage. So even at the end of the day, they still felt it was a great investment overall. So that being said, if you guys have any questions, please feel free to give me a contact through any of my methods below. And have a great day. Speak to you next week. Cheers.